Alright folks, well I tried to do a video with two cameras, the camera that I'm recording on now and the screen at the same time. I'm not really very good at this, I'm not a YouTuber per se, but I tried to make a video with the camera and the screen and sort of interweave the two videos and try and be a little bit more professional about it. I started doing it and the camera, when I went back to the camera to import the video, camera hadn't been working. I pressed the button twice. I'm going to show you this video right now on my sort of sticky notes for the day, but you won't see the camera angles that I've recorded, that I thought I'd recorded on the camera. So a bit of a mess really, but there you go. I tried, and the next time I'll get it right. So now you're just going to see the screen and you're going to hear me talking about me on the video, this angle, but you won't see it because it didn't record. There you go. But you'll be able to get all the information that you need from just listening to the video on the charts. And next time I'll try and do this fancy ninja interweaving of video and screenshot and video and all that sort of thing. I think it could be pretty cool, but I'm not very good at it. So anyway, it is what it is. Enjoy the video. I'll speak to you soon. Anyway, we've got this idea that the pound and the euro and the Swiss franc and all the major currencies are going to depreciate against the dollar in the coming days and weeks. So we want to be selling those currencies and buying the dollar as much as possible. And then we've got a different strategy for the yen against the other major currency pairs. And then we'll have a look at commodities and couple of other things, gold, natural gas, and so on. So let's go have a look at the charts and we'll take it from there. So first of all, we've got the euro and the pound and the US dollar yen, euro yen, etc. All of these on this chart at the moment. And what we're going to do is to try and see what the strategy is for these currencies. Now, I'm going to focus on the euro to start with on this one because we want to really get a strategy going forward for the euro. Now, this is the euro day chart. And basically, you can see we've broken so-called structure. We've broken down through previous support, which is this area here, and we're moving down towards lower support levels beneath us. Our ultimate target is probably about 1.05. Let's see if we can get there. That means we want to sell the euro into rallies. We're currently short on the euro. You can see on these charts, I've got the similar charts up here on this screen. We're currently short on the euro. We want to continue to sell the euro into rallies, aiming for this 100-day moving average, this green support line. That's the first support area. That's at 1.08 roughly. And then we've got 1.0650 below there. And then this big support level where this Fibonacci level is, that's a 38% fib at around 1.05. So that's the overall plan for the euro. And it's a matter of keeping it as simple as that and just kind of saying, okay, what's our overall plan? What's the thesis here? What's the kind of strategy that we want to employ? And doing that. So we want to sell euro on rallies. We've had a little bit of a rally today. We want to sell this euro pair against the dollar into a target of about 1.05. Whether we'll get there or not, I don't know, but that's our thesis for the moment. So we'll stick with that and see if we can get that far. Right now, we're short on the euro against the pound, and the same goes for the other majors. Now, we've got the euro against the dollar. Same goes for the other majors. Here, we've got the pound against the dollar, this one here, and we're looking to do the same. We haven't taken a short position on this just yet. We might get a little rally up into 1.2520, somewhere around there, looking to sell the pound for a move further down into some of these support levels, with the major support level clearly being at these lows here where the 38% Fibonacci retracement is, and the major support, the swing low, so to speak, and just below the 200-day moving average. Right now, we're looking for an opportunity to sell the pound. On the day chart, it's kind of just retracing back higher after Friday's collapse. And if we look at the hour chart, you can see we're just moving up. We've got some resistance above us at the 50-day moving average and this area here. So perhaps we can get up to, 1.25 thereabouts, probably 1.25, a good area to short the pound against the US dollar. So let's try and aim for that, for a short area, and then moving down into those areas that I had on the chart on the major support levels down at 1.18. I don't know if we'll get there. It's quite a long way down, considering that's about 2.25 to it's about 700 pips below us. So whether we can get that far or not, I don't know. Obviously, it's not going to happen in one day. So we're going to be looking to sell rallies, get out on moves down, close those positions or partially close them, wait for another bounce, sell into those and close, and keep on sort of staggering that trade as we move lower down towards the support level, if we get that move. Of course, these are just based on the thesis that the dollar is going to continue to strengthen. Now we've got the US dollar yen. Basically, I think that we've got the opportunity for the yen to strengthen against the dollar despite the fact that we've got interest rate differentials favoring the carry trade in the direction of the dollar. But there are various reasons why I think we could get some strength in the yen against most of the other currency pairs. So we're looking to sell that, perhaps just not yet. We are short euro yen at the moment, and we're short Swiss franc against the yen, but we're not looking to do that yet. The other one I wanted to talk about is the Swiss franc against the dollar. This is an interesting one, considering we're looking to buy dollars against the major currencies. The dollar Swiss franc is probably the most interesting. We've had a lot of strength in the Swiss franc. Wrong chart. We've had a lot of strength in the Swiss franc due to a flight to safety, really. And I did postulate a thesis on my last video that perhaps there's some influence of the Ukraine war on the strength of the Swiss franc, and it's a flight to safety type of play, but there might be other reasons as well. But we're really at some very low levels, and the difference between the Swiss franc interest rate, or the central bank in Switzerland's interest rate, and the Federal Reserve Bank in the US, the Fed, is the biggest. It's the biggest differential, the biggest opportunity for a carry trade. Because we're oversold, because I think we're going to see some dollar strength, I think there's the most opportunity on the Swiss franc against the dollar. In other words, buying the dollar, selling the Swiss franc. So we're long on this pair right now, US dollar, Swiss franc. Let's see how that one goes. I think I'm just really going to try and cover currencies today because it's kind of a test video, so I'm doing this for a bit of fun. But let's go across and have a look at, we're going to look at stocks. Basically, very, very quickly, I'm looking to sell stocks into rallies, including NASDAQ, S&P, AMD, NVIDIA, Apple, and Microsoft. Looking to sell those into rallies. We don't have any positions on this just yet, but if we do get some rallies up into these areas above us, some stage. We've talked about NASDAQ in my last video. Have a look at my last video. I've got some ideas on all of these in there. But I think this one is the most interesting, the S&P. This one, we've got a beautiful funnel pattern. And these funnel patterns, megaphone patterns, are incredibly powerful, very, very useful. And I think if we can get to the top of this megaphone, and that might take us up to 4,200 or 4,220, that'd be a fantastic area to actually sell this if we can get up there, which means we would have broken above previous highs. In fact, the highs of this year means we would have broken through that, probably trapped a lot of short positions. A lot of people will be stopped out. The algos will be backing and forthing around about that level. That's this level here that I've got in yellow, this brick wall above us. I think we're going to have to penetrate that, pierce through it, break above it, and reset everything in the market, pick up some liquidity, and then move back down from the top of this megaphone pattern right up here. And that would take us to around about 4,200, 4,220. So that one I'm watching very, very closely. I like that a lot. It seems counterintuitive because if we do break above these support levels, these resistance levels, and this goes back an awful long way, as you can see, right into, I don't know, if we can go back into March 2022. It was support there, support, resistance, 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 and resistance again now. So it's a really, really key level. And I think if we break up above there, it's counterintuitive in that we might see a lot of people panicking, starting to think, okay, well, the shorts are doomed. This market's going up no matter what. But that'll be the moment to sell. And I think at the top of this megaphone pattern. So I'm pretty excited about that one. And that's all I'm going to say about those, really, because I want to keep this video quite short. Gold, have a look at my last video, looking to buy dips on gold all the way down to some of these levels below us, right down here, into around about 1900, perhaps 1880, perhaps 1820. Watch for gold down at these levels. I wouldn't be selling right now, but I wouldn't be buying right now either. So we're going to have to watch that very closely. I haven't been in a gold position for quite a while now, which is unusual, but I don't like it at this level at all. Natural gas so far, pretty good. We're just, again, I did a lengthy video on natural gas over the weekend. Go and have a look at that. So it's looking pretty good. I'm long from 2.18 and 2.11, as you will have seen in the last number of videos and my tweets. And today we're just moving up, which is looking good. I think we really want to break up above this 2.33 level. We've got this resistance level at 2.36 above us, which we've got to get through. And then the next stop is 2.6 and then eventually 3. I think we might be stuck between $2 and $3 for the rest of this year until the winter. Let's see how that goes. But for now, we're long. Only half of the position size that I want, but at least it's something. Sugar, I'm short on sugar. Again, I don't know, sugar's overbought. We formed a bit of a topping pattern here. I lost this previous trade. I got stopped out. Actually, the contracts rolled over and I just didn't renew the positions. But I've resold it at the top here around about 26 cents per pound. It's not $26, it's 26 cents per pound of sugar. And I'm short here. looking for this to move all the way back down to about 20 to 21 cents per pound. With a bit of luck, that'll work out, and we'll gain back some of those relatively small losses that I took on the last trade, but still a loss. Uranium, we're long on this ETF. I like this very much. I think there's going to be some strength in uranium overall in this form of energy. I think it's potentially something that's going to be a very significant source of energy in the future. There's a lot of investment going into nuclear plants. My personal opinion is that nuclear energy is definitely part of the future. I think the dangers of nuclear energy have been reduced dramatically. I know we had Fukushima and all that sort of thing going on recently, but there were specific circumstances involved there. I think uranium's a pretty good idea for energy supply, and I think we're going to get Elon to blast nuclear waste out into space in the near future. It's just a thesis of mine, an idea. I think we're going to see nuclear waste there's very little of it, and it doesn't weigh a lot. And I think we can just blast that out into space on rockets, which can be returned to Earth, and the rockets are reusable now. So pretty cheap way to get rid of waste nuclear material. I can't remember if it's fusion or fission that they use in plants now. Or a combination of both. I don't know. Anyway, we're long on uranium stocks, ETF, URA. Oil, I'm long on oil as well. WTI, we're long on this from this level where we are at the moment. Just around about 70, we got in at 71, I think. Looking for this to move back into these regions. There's a lot of talk about recession coming, reduction in demand in oil. I don't think so. I don't know. I think it's touch and go. But we've seen this big bounce off this level twice now. Big double bottom here, massive spike down to $64, big move up, just a retracement now, and I think this level here, right at $70, good place to buy WTI for a move back, or US oil, depending on what your broker calls it, for a move back up to the top of this channel, back into the channel, first of all to this red trend line and then higher than that. And I think that's it really. We've talked about Bitcoin, I don't want to talk about. So that is today's sticky note. If you enjoyed this and you want to encourage me to make more videos with 2 cameras, please like the video and consider subscribing to the channel if you haven't done so already. Well, that failed miserably, but anyway, I gave it a go. And I'll see you in the next video. And if you do like these sort of sticky note videos, once again, please just give it a thumbs up and subscribe to the channel. And I'll continue to do these. They're slightly less formal, a bit more interactive, a bit shorter. And I'll just try and give you my sort of overview for the day or the week or whatever lying ahead. And I hope you find it useful. So next time, hopefully I can intersperse the videos with the screenshots and so on. And it'll be a little bit more interesting and perhaps a little bit more professional. So I'm going to get back to work now, get back to my trading and have a fantastic trading day and good luck with everything. And let's see how the dollar goes. Let's see how the markets go. Watch that S&P level for those stock traders at 4,200, 4,220. I think that's going to be a good one. I'll speak to you soon.